Hi everybody. In this video we'll discuss the acid test ratio and the gross margin ratio as described in exhibits 4.16 through 4.19 at the back of chapter 4 in your textbook. Liquidity is the ability of a company to pay its current liabilities. One measure of liquidity is the acid test ratio. It differs from the current ratio that you learned in Chapter 3 by excluding less liquid current assets such as inventory, supplies, and other prepaid expenses. The acid test ratio is also called the quick ratio, and it's defined as quick assets divided by current liabilities, and quick assets are defined as cash plus short-term investments plus receivables. Let's go ahead and work a problem to calculate the acid test ratio. We will be calculating Jamison Company's acid test ratio as of December 31st, X1, given this adjusted trial balance for Jamison. The first thing we need to do is to calculate Jamison's quick assets at December 31st, X1. And remember, quick assets are defined as cash plus current receivables plus current investments. Well, let's go take a look at Jamison's assets. All of these are Jamison's assets, but not all of them are quick assets. Certainly cash and accounts receivable are quick assets, and it looks like Jamison does not have any current investments. Therefore, it looks like Jamison's quick assets consist completely and entirely of cash and accounts receivable. Remember that supplies, other prepaid expenses, and inventory are excluded from the definition of quick assets when calculating the acid test ratio. And certainly equipment and related accumulated depreciation are certainly not even current assets, much less quick assets. Therefore, these are Jamison's quick assets. So Jamison's quick assets consist of cash, $4,050, accounts receivable, $1,400, and that equals total quick assets of $5,450. Now we need to calculate Jamison's current liabilities as of December 31st, X1. Well, let's go back up here and take a look at their liabilities. Those are Jamison's liabilities: accounts payable, wages payable, unearned fees revenue, and long-term notes payable. We're looking for current liabilities. Well, obviously, long-term notes payable is not current. It specifies that it's long-term. Therefore, that is not a current liability. So Jamison's current liabilities then consist of accounts payable, 3480, wages payable, $1,000, and unearned fees revenue, $460. So Jamison's current liabilities are $4,940. Now remember, the acid test ratio is calculated as quick assets divided by current liabilities. So using this information, please calculate Jamison's acid test ratio as of 12/31/X1. Do not express your answer as a percentage, but do round your answer to 1 decimal place. So do your calculation and then start the video again to check your answer. Did you calculate an acid test ratio of 1.1? This means that for every dollar of current liabilities, Jamison has $1.10 in quick assets. One other thing I'd like you to do. Given the common rule of thumb that the acid test ratio should be at least 1.0 to conclude that the company is unlikely to face liquidity problems in the near future, please assess, based on this common rule of thumb, please assess Jamison's ability to face its liquidity problems in the near future. Well, Jamison's acid test ratio was 1.1, so it was just barely over the minimum acid test ratio to be unlikely to face its liquidity problems. So I think we can conclude that Jamison is safe, that they will be able to face their liquidity problems in the near future, but it's getting awful close to the point where that determination would have to be of concern. The gross margin ratio defined in your textbook is net sales minus cost of goods sold divided by net sales. And that calculation bothers me a little bit. Yes, it is an accurate calculation, but it can be so much more easily expressed as gross profit divided by net sales. And the reason is that net sales minus cost of goods sold equals gross profit. So you can use this formula if you wish, or you can use gross profit divided by net sales. Without enough gross profit, a merchandiser can fail. The gross margin ratio helps understand this link. It differs from the from the profit margin ratio that you learned in Chapter 3 in that it excludes all costs except cost of goods sold. The gross margin ratio is also called the gross profit ratio, and it is defined as net sales minus cost of goods sold divided by net sales, or even better yet, gross profit divided by net sales. Let's calculate the gross margin ratio for Jamison Company. We are given the same trial balance that we had when we calculated Jamison's acid test ratio, but we need to pull different numbers off of this trial balance. Remember that the gross margin ratio is net sales minus cost of goods sold divided by net sales, or gross profit divided by net sales. So the first thing we're going to need to do is calculate Jamison's net sales. And net sales are defined as sales minus sales returns and allowances and sales discounts. Sales minus sales returns and allowances and sales discounts. Please calculate Jamison's net sales. When you have finished your calculation, start the video again to check your work. Did you get 153,913? That would be sales of 157,500 minus the total of sales returns and allowances, 1187, and sales discounts, 2,400. Now we should calculate Jamison's gross profit for the year ended 12/31/X1. And remember that gross profit is net sales minus cost of goods sold. We already know what net sales is. We need to subtract from that Jamison's cost of goods sold. And cost of goods sold was $92,350. So go ahead and calculate Jamison's gross profit for the year ended 12/31/X1. And the gross profit is $61,563, calculated as net sales $153,913 minus cost of goods sold of $92,350. Now we're in a position where we can easily calculate Jamison's gross margin ratio for the year ended 12/31/X1. Remember that the gross margin ratio is gross profit divided by net sales. Gross profit divided by net sales. So please do that calculation. Express your answer as a percentage rounded to 1 decimal place. So pause the video and then start the video again after you've finished your calculation. 61,563 divided by 153,913 equals 0.39998, which rounds to 40.0%. Well, that's all for this video. See you next time.